Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Tenax Therapeutics, and let me tell you, it's a bit like a roller coaster. We'll see if they're climbing up or if this is the part where they're plummeting down. So, Tenax Therapeutics just filed what's called an 8K report. It's basically a quick update for investors about big stuff that's happening. In this case, it's all about money, specifically how they're getting a fresh injection of it. Tenax just signed a deal, a securities purchase agreement, it says here. Basically, they're selling shares of their stock to some investors. Think of it like this, they're giving away little pieces of their company in exchange for cash. The main investor is RTW Investments, a company that manages money for other people. They're selling 378,346 shares of their regular stock and also something called pre-funded warrants. Warrants are basically options to buy more stock in the future. In this case, these warrants let the investors buy a massive 3,760,726 more shares. The price for each normal share is $6.04. These warrants are a bit cheaper up front but cost practically nothing to use later, at just 1 cent per share. This whole deal closed super fast. The company already got paid early March. Tenax raised about $25 million before paying fees to the placement agents or covering their other offering expenses. So they get $25 million, but that number will be reduced once they pay everyone else. Now, what are they going to do with all this cash? It seems like Tenax wants to push forward with their Phase 3 clinical trials, which are the final, large-scale tests before a drug can be approved. They say they also need the money for regular operations, capital expenditures, and other general corporate things, like paying bills and employee salaries. This is the big claim. Tenax believes this cash injection, along with what they already have, will keep them going until the end of 2027. Of course, that's just an estimate and things could change. They're hoping to make it that far, and that would be great news for them if they do. These warrants that give investors the right to buy lots of new shares can be used basically at any time and they don't have an expiration date. But to avoid one investor from controlling the company, there are limitations to the amount of shares these purchasers can own. Tenax has also made a promise to the investors that it won't sell any more shares, with a few exceptions, until the end of the year. It gives investors some reassurance knowing that the company won't just sell a ton more stock. To make this stock sale happen, Tenax hired some firms to help them. They are called placement agents and they find investors. Leerink Partners was the main placement agent and other firms joined in too. Tenax paid these firms a fee of 6% of the total money raised and paid for some of their expenses. Because the investors are getting new shares, the company also has to register these shares with the SEC so that the investors can sell them legally in the future. Tenax has 45 days to file this registration and will be responsible for any fees when registering. What happens if Tenax doesn't file this registration in time? They have to pay penalties to the investors. It's 1% of the amount the investors put in, and they will be charged that every month until the company gets the registration done, with some limitations. The company states that this sale of shares wasn't registered under the Securities Act of 1933. They are relying on an exception to those rules. The company has also attached a press release where they discuss this recent offering to investors. They also attached another press release that goes over company updates. After selling all these new shares, the company has 3,965,385 shares out there now. And as always, the company has what's called forward-looking statements. These are basically disclaimers that say, hey, we're making predictions about the future, but things could change, so don't take everything they say as a guarantee. They cite a few reasons why actual results could be different than what they expect, such as market conditions and other risks. If you're super interested, you can check out the actual documents the company is referring to, such as the agreement, the warrants, and other things. They are exhibits linked at the bottom of the filing. So what does all this mean for Tenax Therapeutics? Well, on the one hand, they got a big chunk of cash, which is always good. It gives them more time to work on their drugs and hopefully get them approved. They will be able to fund their clinical trials that are going on while also keeping the company running. On the other hand, they had to sell a lot of stock to do it. That means existing shareholders now own a smaller piece of the pie. The company is hoping that this will keep them afloat until the end of 2027, but there are some major risks. One is whether or not their clinical trials will prove to be successful. Another one is if there will be any new economic downturns that would affect them. Overall, Tenax is definitely in a risky business, but this cash injection gives them a better chance of succeeding. It's a bit like giving a race car driver a full tank of gas. They still have to drive the car well, but at least they have the fuel to get to the finish line. Thanks for watching. If you enjoyed this breakdown, please hit that like button, leave a comment, and subscribe for more corporate deep dives. Until next time.